mostrando una desinflación. Vamos ya con la siguiente entrevista, una entrevista que teníamos, bueno, pues para hablar del mercado indio. Vamos a ver si podemos hablar ya con Ajay Tiagy, que es Head of Equities y PM de UTI AMC. Ajay, thank you so much for being here.
Yeah, thank you for having me on your show.
Ajay, I wanted to speak to you about the Indian stock market. What do you expect of the stock market in the near future?
You see, in the near future, there could be a lot of events, global events in particular, which can decide the direction of the market. But I would say that in the medium term, the Indian stock market should just track the strong growth that the Indian economy is witnessing. We are one of the fastest growing large-sized economies. India is the 5th largest economy in the world at a size of about $3.2 trillion. And despite this high size, it continues to grow at about between 6 to 7%. So I think that just sets the context for the businesses in India to grow, the earnings of Indian corporates to grow in a very strong manner. And that in turn will continue to be the driver of the stock markets in India in the medium to the long run. Yeah.
I guess you're aware of what happened with the Hindenburg Research report of Adani, that scandal that had to do with Adani Group. Do you believe what happened to Adani after the Hindenburg Research report may have an impact on the stock market in India?
No, I think that's a very valid question in the current context. And in fact, 15 days back when this news broke out, I would have said that this will have some impact on the Indian market. But the truth also is that in the last 15 days, the Indian markets have been very, very stable. Yes, the Adani group of companies continue to lose value every other day. So we are still seeing, I would say, a downward reaction to the entire Adani group of companies. Yes, there was some bit of a panic reaction in the first few days on the Indian banks, but that stabilized within a few days. And as far as the broader markets are concerned, they have been fairly resilient. In fact, if anything, in the last 15 days, the Indian markets may be slightly up or above the levels that we saw when the Hindenburg report came out. So I think we would treat Adani as an isolated case. In fact, if you ask me, UTI did not participate in any of the Adani group of companies because we were not comfortable with the amount of debt that this group was lapping up. So I would just call this issue as one of those cases where the desire to grow and grow very fast led to a lot of debt getting accumulated on the balance sheet of different Adani group companies. And that someday had to, lead to a bit of a panic. And that is what just happened. So the businesses are for real, but I think the businesses were being managed with a lot of debt. That's never a very good strategy. Yeah.
Some analysts say India will become the new China, for example, because of the population that India has. What are India's economy's strengths right now?
Sure. I would say India has already crossed the Chinese population, I think about 15 or 20 days back. So today we are the world's most populous country. But I would say that the driver for India's growth are very different from the drivers of China. China has always been a command and control economy, which has a lot of, decision making coming in from one single party, and there's a lot of central level planning that happens. India is much more democratic. If I would want to draw an example, I would say that the construct of the Indian economy is very similar to the Western economies. Secondly, the growth in India is being driven by Indian corporates while following the rules of economics in terms of respecting capitalism, respecting cost of capital, and therefore creating a return on capital which is higher than the cost of capital in order to generate economic value. So I think this is the big difference between India and China. In India, the growth is being propelled by private sector entrepreneurs who are looking at value creation rather than taking diktats from the central government and basically trying to chase growth in different areas. That's point number one. The other strength of the Indian economy is a very, very young population. 10 or 15 years back, most countries in emerging markets actually had very, very favorable demographics. So most countries in emerging markets would actually have a population which would continue to grow, or working age population that would continue to grow over the next decade or so. But when we look at this data today, we realize that there are very, very few economies which can continue to show increase in working age population over the next couple of decades. India is one of them. Indonesia is one of them. A few African countries are also showing that positive demographics. But unfortunately, Brazil, Russia, China, Korea, many of these other countries are going to see a decline in population, which is not healthy for their economic growth. This is the second advantage which India has in terms of young population, continuing to actually add to the pool of workers and therefore lead to expansion in the middle class consumption for decades to come. So yeah, I mean, I would say democracy, respect for capitalism, and young population leading to growing middle class consumption are the big advantages that India has. Yeah.
Mm-hmm. At last, I wanted to ask you about your UTI India Dynamic Equity Fund. What is your strategy in this fund?
So, I would say that in continuation of what I just said about the strengths of India, we have a strategy and a philosophy which basically tries to ride on this core Indian economy strength of domestic consumption. So if you look at the Indian economy, 65 to 70% of India's GDP is on account of domestic consumption. We are not a big export-oriented economy, but we do have a very strong consumption pool here in India. The India Dynamic Equity Fund follows a simple strategy of identifying businesses which can exploit and ride on this consumption boom over the coming decades. But before we go there, we also try and check whether these businesses have already created a profitable business model which can create economic value year after year. So, we first try to look for businesses that can have consistency in terms of value creation, businesses which can generate strong cash flows, businesses which can fund their future growth using internal cash flows. And the second thing that we always want to look for is the longevity of growth in that business. And we typically take a 5 to 7 year view when we are analyzing companies, because that gives us the confidence and the conviction that, temporary blips in any business should ideally be looked through if the longer term picture is very, very solid. So we try to convince ourselves by looking at the prospects of the business over the next 5-7 years and never getting jittery about the quarterly movements here and there. Yeah.
Thank you so much, Ajay Tiagy, Head of Equities PM, the UTI AMC. Thank you so much.
Thank you.
Bueno, y nosotros no nos vamos porque todavía queda mucho que decir, y es que tenemos ahora mismo a los futuros.